Welcome back to Fast Market. I'm Tom White, joined again by Kevin Hincks, and we've got Scott Bauer back. He's the CEO of Prosper Trading Academy. Guys, we got stock stabilized.
Right back where they were a few minutes ago, down 12.75.
Will they buy this dip today? That's a question I want answered.
I mean,
I'd love to know.
It's a heavyweight battle right now.
I know it feels like they're not going to send this any lower, but at the same time, we're about due for maybe a bigger than expected downturn. But you know, right now it seems like we're still doing okay, even though equity futures are down across the board. Let's turn this discussion into airlines, because we got Delta coming out with earnings tomorrow. Scott, now we had Ben Watson talk about the technicals in Delta today. This is a really choppy, hard sector to trade.
And airlines are hard to trade.
I mean, historically, do you do a lot in the airlines, or is there a specific way that you trade or a strategy that you trade?
We typically trade them for earnings.
Yeah.
And we just kind of look to see what trends are out there, best reward to risk that's out there. The one thing I do like about Delta specific, this is not for all the airlines, but Delta specific, like we talked about before, is they came out and were pounding the table on their own company.
Pre-announced.
Right? A week ahead of earnings here. Now, is that a reason to sell maybe going into earnings? I've got to think that there's going to be at least a pretty decent report coming out here. So if anything, I'm going to look for an upside play here. I'm not overly aggressive, which kind of leads me to a calendar spread as opposed to a vertical spread. But if you look here, I think volatility is actually pretty low coming into earnings.
It is
34%.
They pre-announced, and I think that really hit it,
And that's another reason I like the calendar angle of it, because I don't mind getting long some vol going out with volatility already down.
Yeah, and think about this. They have the lowest exposure to Boeing's issues than the other two major carriers in the U.S., or the other three, Southwest, United Airlines, and American Airlines. So that actually is a bonus for them. Maybe that's why it's put a little bit of a bid in there. But Kevin, what have you created here for us?
Something cheap. Look at this. Look at a 59 one-week calendar. Is 18 cents.
And let me see, you're choosing 59 because the expected move's about $1.80 or $1.90.
Yeah,
so, right?
It's right at $1.80, which takes you right to $59.
And that anticipated market maker move that we've got here on the platform equates to the fact that volatility is low in this name because they pre-announced just over a week ago. Kevin, go ahead and analyze that trade for us. You're only paying 18 cents, so there's your. But this is pure directional. And I know that it says the break-even, Scott, are about 56 and about 62. But what are the real break-evens on this trade tomorrow if this stock opens up near or on the upside?
You know, it's probably less than 62 once you adjust for volatility a little bit. It's probably closer to 60.5 to 61. But I'm okay with that because I don't see a big outsized move. I do like the upside, but I don't see a big outsized move.
Yeah, and I think that's a way to take advantage of a directional bias in a very inexpensive way. You know, going into earnings, you can lower.
Remember,
or
a 2
raise.
lot costs you $190 plus commissions.
A 2 lot, yeah.
I mean, a 10 lot.
10 lot.
10 lot.
Yeah,
10 lot.
10 lot.
And look at it, it gives you a chance to make, you know, upwards of $500.
And remember that it's probably going to be around that 400 to 500.
Oh, of course.
What you're looking at here is for this thing to expand to over maybe 40 cents, 50 cents.
Yeah, exactly. I like on a calendar like this, I'm looking at a little bit more than a 1-to-1. So, you know, you're saying 40 cents or so. That's right in the wheelhouse, because if we're paying 18 cents for this and it turns into 40 cents, that's really what I'm looking at.
Okay, so Kevin, we'll go ahead and put that in. But I also wanted to bring up a different type of strategy for that same type of move in there, Kev. And that's look at the price of maybe a 9-day right there in the monthly cycle.
Yep.
Just a call butterfly. So buying the 57.5s, selling the 60s, and then buying the 61.5s. Yeah, you got to sell 2 of those.
1.5 or 2.5? You want to skew that, or you want to make it a pure?
2.5. I'm sorry. Thanks, Scott.
Oh, of course.
Yep. So we're creating a butterfly here. You're paying 52-cent debit each. Each vertical within that butterfly is $2.50 wide. So risk reward is pretty good on that one.
It is.
And that's probably, I think Kevin's just going to show us that He's got it in his custom, but it's just a standard butterfly. And you can see right there, the apex is at the 60 strike instead of the 59. That's another inexpensive way, good risk reward, but this is more of a timing trade. It's not going to start expanding until next Tuesday, Wednesday.
Correct. And it's funny that you bring that up, Tom, because one of the things that I talk to my students about all the time with butterflies is you don't see the price of a butterfly really move until one of two things happen. Either you get a big outsized move in a stock away from all the strikes, or until you get closer to expiration.
Right.
Yeah, it's a timing trade.
Such a late breaker.
Yeah.
Exactly.
All right.
But it's already in the money here a little bit, so it's pretty cheap.
Yeah, and that's the way I look at it. Just giving you different ways. Now, if you're neutral to bearish on this thing, you know, a put butterfly or a put calendar to the downside works in that regard too. But let's look at another name, and that's American Airlines, because they had news today, Kevin.
Yes.
TRASM.
TRASM. What is TRASM?
Total revenue per average seat mile.
Per available seat mile.
Available seat mile.
Yeah.
There you go.
Total revenue per available seat mile.
They lowered their expectations from flat to up 1% year over year versus previous guidance of flat to up 2%.
Right.
So lowered it a little bit, but you've got the stock down 2%. It was down actually more than that. The stock hit 30.
They're blaming the government shutdown. They're blaming grounding of Boeing planes. Remember, American Airlines has 14 of those jets.
Yeah, and I think Southwest, which we talked about last week, they've got over 30 of those 737.
Jet fuel, they said $2.02 to $2.07 per gallon is what they had for the quarter.
Yeah, and we didn't even bring that up in the discussion. The price of oil is up 40% this year. How do you think that's going to affect these?
Like I said, their average price was $2.02 to $2.07.
Yeah, and that's up from $2 to $2.05 average.
So a little higher expenses.
Yeah, a little bit higher expenses, and they got really tight margins on this stuff. But when you look at this, they've got earnings coming up, don't they, Kevin? If we can go to the charts, you can look at right down there at the bottom.
Yeah.
And that looks like it's unconfirmed.
425 unconfirmed.
Yep, unconfirmed on that.
But late. Remember what I like to do too is start out. It was January 24th. Add 3 months to that. It's going to be right around that third or fourth week.
Yeah, and you could always look back to that last year too,
right,
when they came out, and that was on the 26th. So
but it's not exactly that day. But you know it's going to be right around that time. And if you go to the board,
go to the
board and look at right there, the 26th, that week of the 26th, that's the highest vol.
And that's what you want. That's what you want to look at. Now, do you trade this ahead of earnings? Do you not trade it at all? It's come off of its lows today, you know, and I don't know. The way that I look at it is we talk about capacity when we talk about the airlines. When capacity goes up, airlines don't do well. And Scott, when was the last time you were on a flight when the seat next to you was open?
I was going to say that. Years, almost.
Yeah.
I mean, it seems like years.
Do you just tell them sometimes, just stay away from it?
Sometimes you go through the exercise.
Sometimes,
and it doesn't work.
all the time.
Right.
All the time. It's going to be another trade to make.
Right. And move on to the next one.
And there's always a name out there that has a lot of volatility in it. Maybe option premium that allows you to do different things, right? Mm-hmm. And I think that's what you try to look for. But with American Airlines, off of its lows, going into earnings, maybe it's a pause. You've got other names in the space, United Airlines, Southwest Airlines. But here's a question. Do all the other airlines move based on what Delta does? Because they've disconnected.
Sectors can move, you know that. Yeah. I mean, if Delta comes out and kills and does well tomorrow, all the airlines will be a little higher, absolutely.
Yeah, I mean, but do you play that disconnect? Where, hey, Delta Airlines has outperformed, American Airlines and United have underperformed.
Right. I think, like I said, these all stocks are so volatile that you got to be careful with them. And I think the Delta news was something everyone should pay attention to. The fact that they're doing better than everyone thinks.
Yep, and because of that less exposure maybe from Boeing's also playing into that game. All right, guys, that's going to wrap up today's show. I'd like to thank Scott Bauer, CEO of Prosper Trading Academy, for joining us once again. Scott, always good stuff. That does it for Fast Market. Tune in tomorrow at 10 a.m. Central Time right here on the TD Ameritrade Network. Have a great day, everybody.